And on Thursday, we had another tough open for bonds. They were down almost a quarter point really early. Treasuries were up 4 basis points. Bonds were sideways in quiet overnight trading. The big jump in producer prices and a sub 200,000 print in the jobless claims kicked off a lot of the weakness around 8:30. And then Lorraine and Meester introduced the idea of a 50 basis point rate hike that got things moving even more quickly 15 minutes later. This view was later echoed by her counterpart at St. Louis, being James Bullard. Jobless claims came in at 194,000 on a 200,000 forecast. It was 195,000 last time, down 1,000 on the week. Continuing claims rose 16,000 to 1.7 million. Core producer prices month over month came in at plus 0.5 on a 0.3 forecast. Headline PPI came in at 0.7 on a 0.4 estimate. December was revised up from 0.5 negative to 0.2 negative. Inflation at the wholesale level grew at the fastest pace since June of 2022, according to the Producer Price Index. This is after 2 months of declines in November and December. The index rose 6% on an annual basis. Energy costs were a big driver. That was higher than street expectations as well. Then we got the Philly Fed, which came in at negative 24.3 on a negative 7.4 forecast. It was negative 8.9 previously. Housing starts came in at a 1.309 million annual pace on a 1.360 million forecast. It was 1.371 million previously. As I said, Lorraine and Meester was quoted as saying he saw a compelling case for 50 basis point hike at the last FOMC meeting. We also got news that investors bought 48,455 homes in the fourth quarter of 2022, which is the second biggest quarterly decline on record. An AHB home builder survey for February increased 7 points. About time they have something optimistic to say. From 35 up to 42, it's the strongest 1 month gain in 10 years. Present conditions increased by 6. Future outlook by 11 and traffic by 6. Okay, let's be real. The conditions have not changed that much in the last month. For them to change their sentiment that much over this slight change in our lending environment, these home builders, they need some mental readjustment, if you ask me. But at the end of the day, we are down 11 basis points on the day, basically right at a par on the UMBS 5.5. Puts us right underneath this 100-day moving average at 100.292. We have a floor at 100.054, which it blew through as well. We have a floor at 100.094, which we blew through as well. So the next floor is at 99.845, which actually got tested yesterday. So we'll have to see where the market determined that we are ending up. If you want a deeper dive, Chris Whalen has a great editorial about how the FHFA is changing the rules for servicers. This is all a result of COVID. Essentially, loans in forbearance during COVID won't be offered the same sorts of reps and warrants relief as typically granted during a natural disaster. So the reps and warrants pertains to the things that can be pushed back on the lender in terms of losses. This creates an open-ended liability stream for mortgage bankers. Essentially, the government asks servicers to offer forbearance and can now slug them out over it. So they said, hey, we have to offer these forbearances. And they're saying, well, but you also have to eat the negative effect of that. He also mentions that a lot of banks are sitting on a big unrealized losses on their portfolio of mortgages originated in 2020 and 2021. This includes Fannie Mae and Freddie Mac, which might explain the change in policy. He stated the banks have a $350 billion deficit available for sale securities and loans. Many of these securities and loans are now trading at a 15 to 20 point discount in the market and might have to be sold at some point fairly soon. Funds which are flush with cash might be able to pick them up as a good trade if that happens, but it'll be at this massive discount, which will hit these mortgage bankers and cause them to increase their rates. We also got a post from our sponsor at WellThatMakesSense.com. It's the 6th edition of Learning to Write Sales Copy. So this is about the emotion principle. Every word has an emotion associated with it and tells a story. Every good ad is an emotional outpouring of words, feelings, and impressions. So every time you write something, make sure you have an outpouring of words, feelings, and impressions. Check out how on our sponsor at WellThatMakesSense.com.